Traders, Luke Suddards here joining you from a hot and humid London. We saw overnight the RBA decided to stick with their plan to taper, but there was a dovish sting in the tail. What I mean by that is they decided to extend the QE program from November 2021 this year to February 2022. So we've also got the ECB meeting coming up this week, Thursday. And my question is, will the hawks squawks finally be heard and we see a tapering of those PEP purchases, Pandemic Emergency Purchase Program QE, for Q4 from 80 billion euros a month to maybe 60 billion? I'll get a little bit more into that in detail, but let's tuck right into the charts right now. So we're going to start off as we usually do with the dollar. And for the dollar, we saw last week Friday the jobs number was awkward. Okay, the headline payroll figure missed consensus by a very large magnitude, yet average hourly earnings, i.e. wages, were punchy and above consensus, which would have done nothing to lower inflation fears. The latter was enough to put upward pressure on US 10-year yields and see a steepening in the yield curve. I think that's why we got a dollar which was unreactive as well as one bad month not being a trend in jobs data. The September number will be important. Another weak number may really make the Fed reconsider their taper timeline and dent the dollar. There's not much on the data calendar this week for the US. There's JOLTS data out on Wednesday giving us further insights into the labor market. There's jobless claims on Thursday, bond auctions scattered throughout the week, and then we get PPI on Friday, which is producer side inflation. So let's look at the chart. Let's see what's going on there. Price is now firmly below its 50-day simple moving average, and is also below the 92.385 horizontal support. Post NFP, price sort of slipped just below the 92 level and retraced its losses, as we can see where it is now. The RSI has sort of fallen below the 42.93 mark, and now it's just slightly above there again. This is where price managed to hold last time it sold off, as you can see back in end of July, August. There we go. I do wonder if the dollar index is in this massive range between 93.2 and 89.6, as indicated by the white solid lines I've drawn on the chart here. The upside price target for me would be 92.59, which is where the 50-day simple moving average is, and 92.8 resistance above there, which is around about here. We have drawn in that little white line. On the downside, you've got 92 and 91.5. Which is just above the 200-day simple moving average. Those two areas would pique my interest on the downside, but that would make me start to sweat if I was a dollar bull. Right, moving on to the euro. As I was speaking about earlier, we've got that ECB meeting. The punchy inflation number out last week for the Eurozone brought the hawks out and ignited a sell-off in German bunds, and the BTB bund spread, which is the difference in yields between a German bond, a 10-year German bond, and a 10-year Italian bond. And that's a very popular spread in the market. Maybe with that widening in the German bunds and the BTB bund spread, maybe the market's pricing in the potential for some tapering. I certainly think they are. Look, it's a really tough call to make, but I think it's more likely we see a minor taper to PEP. Lagarde is a dove though, and she'll want to avoid a hawkish miscommunication, so she'll probably try and litter that with dovish language like we saw with the RBA. Taper, but that dovish twist essentially, whereby she'll say probably something along the lines of, but if financial conditions change, it's a flexible program and we can top it up at will. We'll also get updated economic forecasts from this meeting. Inflation and GDP will likely be upgraded. We'll get the final estimation for GDP data today. As you probably receive this, it's out at 10 a.m. As well as the ZEW sentiment readings. And then we'll finish off with some final readings on inflation data from Germany on Friday morning. So let's look at the technicals. The euro, it's been on a winning streak against the dollar, climbing above its 50-day simple moving average and upper trend line of the descending channel. But now it looks like the 119 resistance is proving a little bit too much for the single currency to overcome. We might also be seeing a potential double top here, back at that 119 resistance. The RSI looks to have peaked and is rolling over that 60 level. Upside targets remain 119 resistance, and above there, I'd say like 120, where the 200-day simple moving average is, and on the downside, 118, the 50-day simple moving average, and 117.5 support would be important levels for me. Moving on to the pound cable. Again, let's have a quick chat about the fundamentals very quickly. We'll get some GDP numbers out on Friday, as well as industrial production figures from the UK. There's not really any domestic market moving information we'll be getting this week for the pound. I think more interesting is the Tory backbench revolt against the latest national insurance tax hike. There was speak about a potential cabinet reshuffle this Thursday. And many are saying that this national insurance tax hike actually breaks the government's 2019 general election manifesto pledges. So there's quite a bit of unhappiness regarding that. And then lastly, in the geopolitical sphere, we have the Northern Ireland protocol issues between the EU and UK. They've decided to extend again. Shock horror, the can's been kicked down the road. Let's move on to the technicals. So cable is ever so slightly just below its 50-day moving average where it's trading right now, and the 200-day simple moving average. There's a death cross that's happened, unfortunately, for the cable bulls. It is very minor though, so it could be reversed. Prices kissing the 1385 resistance currently. It's right around that area. The RSI is also just above the 53 level, but is now peaked just above and now is rolling over, which contain previous bullish price rallies. Potential targets on the upside for me would be 139.5 around here, and then 140 resistance above there. On the downside, 136.6 and 136 would be my targets. The double bottom back there in March, April, as well as another double bottom in July, August, slightly lower, 136. Moving on to EURGBP. It's literally doing nothing. It's just sitting there in this very tight coiled range. I've got a trip to Spain coming up, a holiday, and I want EURGBP to move lower, so I've got a better rate to exchange my pounds at. But enough about my holidaying schedule. Let's get on to EURGBP technicals. So essentially, as I said, it's been treading water, bumbling around this 0.8550 support, as well as 0.86 resistance. For those with a bearish bias, I'd like to see price candles back below the 50-day simple moving average. The RSI moved towards the 61 level, rolled back over. Now it's having another go. This marked previous price rallies. Targets on price moves upwards. Apologies about that. Targets on price move upwards are around 0.86 and 0.865. On the downside, you've got 0.855 by the 50-day simple moving average, and then 0.85 lower from there, the round number coming a nice move lower. I'd love it to move there, but we'll have to wait and see how hawkish the ECB are on Thursday, or dovish. Moving on to the Aussie dollar, we can see that we saw the RBA decide to push on with its taper from Aussie dollar 5 billion to Aussie dollar 4 billion, but there was a dovish sting in the tail in terms of the program being extended from November 2021 to February 2022. And we saw it actually move initially higher, and now it's been sold back down. And we're hovering around this 0.741 area, just above the 50-day moving average. We know, it was a close call, but I'm not really shocked that Governor Lowe has decided to continue with the taper, because he does think that fiscal policy is better to deal with this demand obstruction we're seeing. they're obviously not keen to take their foot off the stimulus completely just yet. But things are looking up for the Aussie. They've got a high savings rate, so there's lots of pent-up demand when it can be released. Vaccination rates are ramping up. I saw that they did a deal with the UK over the weekend for 4 million doses of Pfizer, a swap deal. They went into lockdowns on a solid growth footing. We had that better than expected Q2 GDP growth. And, in the grand scheme of things, 1 billion Aussie dollars is pretty insignificant. And another thing to remember is net specs positioning, which is the hot money, is very short the Aussie dollar still. So there are risks for a short squeeze to occur on positive price moves higher. So, it's put in some good upside moves, pip moves, and now it finds itself above this 50-day simple moving average with the 21-day EMA curling upwards. Prices on this 0 point, it's just below it at the moment, but it's very close to the 0.742 horizontal resistance. The RSI is rolling over at the 60 level, which isn't great and sort of mimics the rolling over we've seen in price action. Targets wise, I like 0.75 on the upside where price got very close to it, sniffed around that area. For continuation of that upward trend, I like 0.75. 7 to 0.76, which is around the 200-day simple moving average. And on the downside, I'd see what price does around 0.7372, the 50-day simple moving average, and the 0.73 support level. Moving on, we've seen the similar, the antipodean cousin of Australian dollar. The New Zealand dollar moved a lot higher, very aggressively, got above its 200-day moving average, ran into a bit of resistance at 0.715. And now is curling over slightly. The RSI got just above the 60 level where it marked previous peaks and price rallies, curling back over again. We'll have to see if this move is sustained. Jacinda Ardern thinks that they've basically eliminated the COVID cases in their country, so we could see the RBNZ come out with some more punchy rhetoric and hawkish increases in interest rate hikes, which could keep the New Zealand dollar, the Kiwi, still flying. I've got to put the US dollar JPY on the radar. It's a major currency, but in terms of movement, it's been very moribund. It's bounced off its lower range of that RSI. Just to show you how tight the movement's been, the RSI is even in this ridiculously tight range. It needs something, a catalyst to break it out of its sleepy range bound movement. It's trapped between the 50-day simple moving average and the 21-day EMA. Targets wise, 110.3 resistance would be a good initial area to keep an eye on. And with a move lower, I'd probably say 1.97, which we're just above at the moment. Support would probably be key. And then obviously you've got the sort of more important range bounds where you've got the 110.8 and the 109.2 area. Moving out of FX into commodity land, gold. It looks like we could be seeing a triple top playing out here as gold rolls over. The RSI crept just above that 55 level and now looks to be rolling back over. It's above its 200-day simple moving average. We could potentially see the death cross reversed if price action was to continue moving higher, but right now that doesn't look to be the case. We saw a double top. Could we be setting up a triple top? This 1830's key line in the sand here, resistance-wise. If it was to break above that and the yellow metal gets its shine, 1860 would be my target on the upside, and on the downside, 18 horizontal support with a 50-day simple moving average right around there would be important. Further below that, you got support at 1775. As well as the upper trend line of the descending channel. Those would be my areas to watch. Then finishing off with the black liquid oil, just to give you a brief rundown on the fundamentals. The black liquid was under a bit of pressure yesterday as the Saudis decided to cut their prices for Asian customers by more than twice the expected amount to try and retain market share amongst Asia. 88% of oil production in the Gulf of Mexico remains shut in. So, yeah, I think oil's just sort of in this kind of wait and see approach. It's waiting for its next big catalyst to decide on its price direction. I think we're going to see some weak US inventory data this week based on the distortions of Hurricane Ida. Obviously, it only landed last week Saturday, so it hadn't fed through to last week's numbers, but I think we'll see those effects filter through this week, and that could maybe potentially cause some weakness. Prices sort of got almost just shy of that $74 resistance. It was also up to 58 on the RSI. Um, and now we're sort of at the 72.55 level. That would be my upside target, 74, 75. Beyond that, the 6 July high of $77.82 comes into play. On the downside, the $70 support around here's a key one. We'll see if the 21-day exponential moving average can provide some support too. Below there, you got the $68 support. And even further than that, if we saw a really aggressive sell-off like we saw in mid-August, you got the 200-day simple moving average and horizontal support at $65 essentially. Thanks. I hope you've enjoyed today's Technical Tuesdays. There's a lot to digest, and yeah, join me next week.